Uber reporting earnings of 63 cents per share. It matched estimates. Revenue of $12.65 billion beat expectations. The company also authorizing a $20 billion share buyback. Joining us right now to run through all of these numbers and explain what's going on. He's got his pulse on the consumer. First on CNBC's Uber CEO Dara Khosrowshahi. Good morning to you.
Morning.
It looked like a beat across the board. I want to talk about what happened. And I also want to understand what you think is going on with the consumer. I'm also a little surprised by the way the stock market reacted the way it did, at least this early this morning.
Yeah, I think it's very difficult to interpret short-term movements. The fact is that the stock price has done really well this year, and the results were excellent, right? Trip growth of 18%, 3.3 billion trips, gross bookings growth of 18% constant currency to 47 billion, EBITDA growth of 35% up to 2.1 billion, which is a record for us. And then free cash flow. Free cash flow just in the past year has been $8.5 billion, which now you're seeing us use that free cash flow, which for us is a bit of a surprise in terms of how strong it's been, and reinvesting it back into our shareholders with this $20 billion buyback. So we're very, very excited about the growth of the company, the profitability of the company, and we're using our capital to reward shareholders who deserve to be rewarded when the numbers are this good.
Let's talk about the mobility piece of it first. That's the biggest piece of it. What are you seeing in terms of the consumer strength across the board here in the U.S. and maybe abroad as well?
Yeah, we're seeing across the board, both in mobility and delivery, Andrew, the consumer remains strong. In the U.S., actually, what's going on, which is pretty interesting, is that we are able now to modulate some of the increases in the insurance costs, which has been responsible for the growth of pricing in the U.S., which you have definitely noticed and remarked on. As these insurance costs are easing because of a bunch of safety stuff that we're doing, we're able to pass those savings on to the consumer. And it doesn't affect our profitability. We're essentially, taking these savings, handing it over to the consumer. And actually in the U.S. in July, we've seen trip growth accelerate versus Q2 as a result. So we expect Q3 trip growth in the U.S. in mobility to be faster than Q2 trip growth, which we think is a great trend. So for us at this point, we're not seeing weakness in the consumer. It's steady as she goes. And for Uber, that's great news.
What do you make, by the way, we were all looking at these BLS numbers and some of the other economic indicators. I think we're going to show some tape later from an interview I did with Brian Moynihan yesterday. He actually is with you. He's seeing spending going up. I'm curious, within the different segments, though, within your business, are people upgrading? Are they downgrading based on price? Are you seeing any price sensitivity? Is there anything like that?
Different parts of our demographic are sensitive to price, and then there are other parts of our demographic who want a premium product. So what you're seeing from us, Andrew, is actually a barbell strategy. We're really working hard to pass on savings to consumers. So, for example, Wait and Save is now which provides 9% savings on average. If you wait a little longer to get your Uber, is now available in multiple cities in the U.S. We're introducing products like Price Lock for commuters, where you can lock your price, no surge during your commute, and it's resulting in a higher number of commutes as a result. And at the same time, the premium business is doing really well. Premium is now over $10 billion, up 30%. Our reserve business is up 50%. So both demographics are doing well. Partially, it's because of the innovation that we're bringing forward to target lower demographic and or the premium demographic. So at this point, we're not seeing any weakness whatsoever.
Any thought that there's going to be increased competition on price? It was just, I think, earlier this week that Lyft announced this deal with Baidu. Really the first time that you'll see their app internationally.
Well, I think the Baidu deal was really about autonomous. And the promise of autonomous is to open up, what we think is a $1 trillion TAM. As you know, Andrew, we are one of the leaders in terms of autonomous. We're working with Waymo in Austin, where we expanded our operational domain. We launched in Atlanta, and it's been a great launch. The average Waymo in Atlanta is busier than 99% of drivers in Atlanta as well. And we're working with players like WeRide in Abu Dhabi, Wave in the UK, Baidu outside the US, and Neuro and Lucid here in the US. So we're very excited about the autonomous trends. I think before I was on, we were talking about AI. This is physical world AI,
Right.
and we think it's going to be a huge trend going forward.
What do you think about the, I don't know, I wouldn't call it an experiment, but maybe it's an experiment. They're early days. Tesla in Austin, you obviously have your own data. You're seeing them as a potential competitor, maybe as a partner in the future. I don't know how you think about them these days.
Oh, I think it could be a competitor, could be a partner, and you know when you're talking about trillion-dollar TAMs, there will be no winner take all in this marketplace. It's great to see Tesla in the market. They're taking their time and they are making sure that they're expanding in a safe way. We've always believed that the potential in self-driving is for these cars to be superhuman in terms of safety. And I think that's a welcome thing, whether it's a Waymo or it's a Tesla or it's a Wave. All of this competition in autonomous is going to create safer streets, and we're going to be a big part of that.